In the last video of my M1 Finance dividend growth portfolio, I talked about how I sold out of Starbucks, and I didn't tell you what I replaced that with. And I replaced it with Home Depot and Whirlpool. Now, these two companies are fantastic companies, and it doesn't matter what metric you're looking at. It doesn't matter if it's the profit margin, operating margin, gross margin, return on capital employed. No matter what you're pretty much looking at, Home Depot is a company that has incredible financial metrics on an annual basis because it's free cash flow, it's top line, it's bottom line. Everything you can look at for this company is typically going up, including that sweet, sweet dividend for a dividend growth investor. So we're just going to go over briefly in this video why Home Depot is one that I considered adding in the portfolio and why I considered increasing it over time, and while it will continue to remain a core holding in the portfolio, likely for as long as I have this YouTube channel. So it's going to be a fun one. Stay tuned, and without further ado, my name is Jordan. I'm a millennial investor, and if you haven't seen me before, this dividend growth portfolio as well as the growth portfolio is shared down below in the description, and this is the weighting that I currently have on that growth portfolio, which is listed right here. And this is my portfolio balance over time, including where we're at today at the time of me filming, which is about $37,600. Now, my portfolio performance over time is also listed right here, which is currently outperforming so far in the 1 month, 3 month, and year to date, but we are lagging a little bit in the 1 year, so stay tuned for that. We'll be giving an update on that in a week or two, but check out all the stuff down below in the description if you want to invest in this portfolio yourself, or if you want to check out M1 Finance, which is the platform you're looking at right now. You would get $10 for doing so, and you'd help support me and the channel, and 125 people have done so far using that referral link. But thank you so much for tuning in, and without further ado, let's go and get started with Home Depot. Now, in the most recent quarter, they just came out with this, and they announced record earnings, okay? It was $43.8 billion for the second quarter, which was an increase of $2.7 billion, or about 6.5% growth. Now, comparable sales for the second quarter increased 5.8% international, and then the U.S. increased 5.4%. So about 5% across the board, whether it's domestic or international. Now, if you don't know what comparable store sales is, this means existing stores that are already open that are selling more. So if it had $100 million in sales last year, it had $105 million this year. Okay. Now, net earnings were $5.2 billion, or about 5.05 in diluted earnings per share. And last year it came in at about 4.8 with 4.53, which represents an 11.5% increase. And the CEO said himself, in the second quarter, we delivered the highest quarterly sales and earnings in our company's history. Our performance reflects continued strength and demand for home improvement projects. Our team has done a fantastic job in serving our customers while continuing to navigate a challenging and dynamic work environment. And not only that, but the fiscal 2022 guidance was reaffirmed with strong top line and bottom line growth, so the recession is not hitting them as hard as you'd probably think. And this is represented in their quarterly numbers. So if we look at the quarterly charts, if you look at the revenue, record after record after record, highest level you've ever seen. The previous record was $41 billion. This quarter they just came out with almost $44 billion. Now, its profitability, its net income came in at a record $5.17 billion. And the same thing for earnings per share, record 5.05. And of course, this company's dividend, as it continued to rise over time, is at a record level as well. And this continues quarter after quarter after quarter. Now, this company has done very well over the last couple of decades, and I think it will continue to do well as it continues to raise its dividend, buy back its own stock. The share repurchases for this company has been quite nice, by the way, which I might mention is part of the reason why I'm considering investing in this portfolio and raising the percentage for Home Depot as a core holding. Now, if you look at the stock price, if we hop over to M1 Finance and we actually search HD stock, which is Home Depot stock, and we look over the last 2 years, ever since its peak at around December 31st, right around January 1 of this year, it hit its peak, which was around $420 a share or so. And year to date, this company is now down 33.5%. This is incredible how far Home Depot has fallen. And if you look, it's pretty much trading at the same prices that we saw all throughout mid-2020, the summer of 2020, at around $275 or so. Now, this is the time, in my opinion, when you want to be buying Home Depot. Not when it's $400 plus, but when it's under $300 a share. Because obviously you're buying at a much better valuation. And I think one of the things I want to mention about Home Depot, which is why I want to add it and continue to increase it as a core holding, is because one of the main reasons is that it's one of the only brick and mortar companies that I can think of that's protected against Amazon. Amazon is one of the largest portfolio holdings in the growth portfolio for me in the M1 Finance portfolio. But if you look at Amazon, it continues to dominate over so many different names in the brick and mortar space. One of the ones that it does not dominate over is Home Depot. And I think it describes it pretty basically here, and it gives a couple examples in this article, but size is one of them. The home improvement retailer offers a wide range of products for the do-it-yourself and professional customer. A typical Home Depot has a massive retail area of 105,000 square feet. However, it uses the space well, carrying a broad inventory of big and bulky items that would be difficult and expensive to ship. For example, you can easily walk in and buy items such as large refrigerators or 12 by 12 foot plywood boards. These items are expensive to ship and usually require a two-person team to deliver. The usual FedEx or UPS truck just has one person. This logistical challenges for Amazon have kept it from taking market share from Home Depot and are proving to be long-lasting. Now, this is the perfect example of me because if you didn't know, me and my wife just bought a home. Let's see, what was it? It's been about 2 months now we've lived in this home. And in that 2 months, we acquired a lot of different large appliances. Refrigerators is a perfect one. We had to buy a refrigerator, and while Amazon is great for many different products to buy, especially smaller products, there are many things that I like to buy on Amazon and will continue to do so, and that's why I'm an investor in the company. But something like a refrigerator is something I do not want to buy on Amazon. That's something I want to go into the store, I want to see it, I want to touch it, I want to see what it looks like, I want to have someone to talk to help sell me on it. And the same thing for other things. We also bought a washer and dryer. I think we spent like $1,500 on a washer and dryer, and spending that much on something is something that I'd really like to physically see and touch and talk to someone about and model out compared to the other products, and that's not something that you can really logistically do very well on Amazon. Now, this not to say that it could prove to be wrong in the future. Amazon could start getting into the big bulky items better, beating out a Home Depot, but I don't think that's the case, at least not anytime in the short term. And this is what has proved this company to be a successful business model that continually grows on both top line and bottom line. And so when we look at share prices like this, when you see a company that has went down and down and down, and is now down 33% year to date from $400+ a share to now trading at about $275. The dividend is the highest it's been in about 2 years. The valuation is the best it's been in just about, 2 years other than the COVID pandemic. And now I think is the time to be buying, in my opinion. So that's why I decided to increase it into the portfolio. It's now at a 6% holding, which makes it, like the 7th or 8th largest position. It's getting pretty up there. And overall, guys, it's just doing well. It's a company that, despite the stock price, the actual business, the fundamentals itself, is doing well, as we can see from these numbers and the business itself. But thank you guys so much for watching. I appreciate you watching all the way to the end. If you watched all the way to the end, I'd invite you to subscribe. Sign up down below for all the stuff, including auto savings accounts, credit card referrals, and of course that $10 referral to M1 Finance. But thank you so much for watching, and I'll catch you guys next time.